Hi everyone, welcome back. Today we're going to talk about planning for a budget. And now that we're almost at year end, I think it's a really important topic because we could kind of get prepared for 2023. So, to get started, what is planning for a budget? It's basically creating a budget and then utilizing it to control the operations of a business. So, the purpose of a budget would be to watch the financial progress of an organization compared with the expectations. So, usually we refer to this as a comparison of budget versus actual and then analyzing the results. So, the system that we mostly use with our clients is called QuickBooks, and we could actually import a budget template, which is usually in Excel, and then we could compare it real time with the actual results. And we would look at the under or overutilization, and then we could compare it what we actually planned for. And most of the time, we're going to use the same chart of accounts, meaning the same accounts, so the report would make sense. Right. So then the budget could help you to forecast what money you expect to bring in, plan to spend the revenue and expenses, and then see the difference between what you planned and the reality. So now I'd like to talk about the components of making a really good budget. So first of all, you should start with having an estimated revenue. This is what you expect to come from sales of goods or services. It shouldn't be taken out with any expenses. It's just purely revenue. And if you are a startup, you could just look at the industry averages if this is the first time that you're planning for it. And then the next aspect would be the fixed costs. So these are basically the costs that are consistent, such as rent, insurance, utility, something you could really plan on. Like also equipment leasing. This is typically like a set price that you know that you're going to have to pay throughout the year. And then we have the variable costs. So these kind of vary with the production, with the sales volume. So this is associated with the cost of goods sold. And then this could also be some sort of commissions, credit card fees, and travel, something that you can't predict throughout the year. And then also very important not to forget is the cost of salaries, and they could both be under fixed and variable costs. So for example, if you have your in-house team that's usually associated with like fixed costs that they have a set salary. However, if you have a production sales team, that could be a variable cost, something that you can't predict. Then you could also have some on-off costs that could be during the usual work of business day, something that could be like an equipment that you had to buy or moving expenses, some extra software or furniture. And then it's really important to look at your cash flow. So this is the money coming in and out, and a lot of it is associated with accounts receivables and payables, right? Depending on, so you have to watch it closely. And then obviously the net of the profit, right? What is basically you're going to take after taking your expenses. Obviously, growing profits means a growing business. And so you really have to plan for it. And we could set up sort of expectations of like the profit margins of how much is going to be left after the cost of goods and other things we discussed. And so I just kind of want to close off by talking a little bit of some of the things we have to look at, right? So it's really important at the end of the day with the budget is to have profitability, which is, looking at the income breakouts and expenses, having our activity ratio, which is the accounts receivable, accounts payable days, how quickly we get paid from our customers, how quickly we could pay off some bills. And then efficiency, which is return on equity and capital employed. And then the cash flow, which I mentioned, cash on hand, which is variable cash flow. And then the growth. So the few things that most of our clients look at is revenue growth, gross profit, and earnings before income tax growth. These are some of the important components of looking at the budget. And now I'd like to go to Irene because I'd like her to sort of talk us through how she looks at a budget with her clients, how she just kind of looks in her legal world in this.
Thank you so much, Jane. So I wanted to actually start by saying that the budget as it, I always kept let's say a personal budget, but for the business, starting the first year or two, it's not necessarily something that's the first on everyone's mind, but I have to say that it really should be because, and I speak personally now, it has made a world of difference in the decisions that are being made, the policies that are being put in place, and where we've seen issues stem from by now that we see where are we losing on certain, for example, too much inventory was being purchased, and all of that was being purchased in our example anyway, all of that was being purchased in multiple different places instead of having one centralized place where you can actually have parties bid on what they're going to sell to you. And so we found that just seeing that on paper made us realize and made us go to various manufacturers to get products that we use weekly, monthly, that we would have to replenish anyway. And we now had multiple bids come in. And so it made us in a better position. We were able to get better bids. So I absolutely recommend it. Now, for what from my clients' end and what my clients usually request, we have various types of budgets, and closer to the end of the year, our clients who, especially clients who have many employees, will ask us to give a proposed budget based on what we see as coming forward the following year in laws. Some of the employment laws do take place retroactively, so we can almost foresee that given the amount of employees, there may need to be a carve out for a litigation budget. Sometimes new documents need to be prepared. This year, I've urged my clients to prepare new employment documents and new policies because we did have a lot of changes to the laws that this year, as well as laws that are taking place in 2023. That wasn't the case the last year. And the year before that, 2020, of course, everyone was focused on COVID pay and COVID policies. And so those we were updating throughout 2020. But this year is special in that sense that we've seen a lot of policies come in. And so we know, and we've already worked with our clients on that legal litigation budget. How much would you want to allocate now? How much in Q1, Q2? But you really need to have that budget in place in order for my clients to be able to make those decisions so that they don't find themselves in a position where they don't have that cash flow that they might otherwise need. And another interesting thing is from the budget point of view, something that we've heard and something that has helped me personally and what I tell all my clients is when you're building this budget, make sure that you consider, of course, salaries, but also yourself as an expense on the budget as well. So as an owner, there is some sort of draw that you would like to take. Sometimes that's not the case the first year of a business, but after that, I assume everyone thinks that they're going to be profitable in their business. And so where I find that our clients fail to do that is they forget to put themselves as an expense entirely. And they really, really should be, because I think that that will help with the numbers and that will help get you to where you need to be to understand, because then you can work backwards. And that's how I look at the budget, is being able to work backwards. And then the last thing is there was a few podcasts where we talked about sales of business and we spent some time on that. It's really important to have that budget for the sale of business, because we do find that sometimes you're in the middle of a year or in the middle of a quarter, and I'll have my clients who are purchasing ask, what can we expect? And of course, there's always the limitation. You don't know how many of the clients are going to stay, how many of the contracts would stay with the new owner. But by having a budget in place with proper projections, you have something to work off of. So if you are very conservative, you might want to take off 20-30% of that as a loss for the first month. Maybe people don't go with you when you do the sale, the startup expenses and everything. But otherwise, it at least lets you know where you're starting. And then you can remove whatever portion of that so that you can really get the real numbers. So all of my clients that are looking to possibly sell in the next year or two, I always encourage and urge them to make sure that they have a budget. It helps answer a lot of questions and gives possible buyers a lot of comfort in the fact that they're purchasing a company that otherwise seems to have all of their financials together in one place, because everything is important and the profit and loss and general ledger is important, but that budget will really answer a lot of questions to a potential buyer before they even go in and look at everything else. So if there are any questions on any of this, please feel free to reach out to Jane or I. We're always here and happy to help. Thank you so much, everyone.
Thank you.